Elon Musk's tweet about Tesla now not taking any Bitcoin as payment for Tesla vehicles caused a significant dip in cryptocurrency's value. It was only a few days ago that Musk announced that Tesla would not be taking any Bitcoin as payment for Tesla vehicles, citing the energy needed to mine Bitcoin. Musk said that Tesla still intends to use the currency for transactions as soon as mining transitions to more sustainable energy. Since Musk has halted Bitcoin payments to Tesla due to environmental concerns, Tesla is now looking towards other cryptocurrencies that use much less energy. According to attorney Johnny Deaton, Musk has handed the best ad campaign to Ripple's XRP executives. Ripple's CEO Brad Garlinghouse and other executives aren't strangers to promoting how energy-efficient Ripple is, with Garlinghouse recently stating that XRP is 10,000 times more energy-efficient than Bitcoin. XRP isn't the only energy-efficient cryptocurrency on the market. Ripple has added its voice to the ongoing cryptocurrency sustainability pool with the announcement that it aims to hit carbon net zero by 2030, and it has partnered with various sustainability leaders to achieve that aim. In a tweet shared on May 15, Ripple, XRP, linked to a post on its website. The page detailed a number of aspects of their environmental strategy. This included a list of their partners, which already counts the Bill and Melinda Gates Foundation, Mercy Corps, Mojaloop Foundation, and the Institute for Business and Social Impact among them. Overall, Ripple has non-government organization partners in more than 80 countries. Now, sustainability leaders like the Renewable Energy Buyers Alliance, REBA, the Energy Web Foundation, and Watershed have joined their ranks. The page also states, "Our current global financial system does not meet the needs of 1.7 billion unbanked people. Digital assets and distributed ledger technology, DLT, have the potential to transform how unbanked and underbanked populations access basic financial services and send and receive money across borders, making it more accessible, affordable, and secure." The report on the website also referred to how green XRP is compared to leading cryptocurrencies Bitcoin, BTC, and Ethereum, ETH. More specifically, XRP uses only 63,000 gallons per 100 million transactions. Meanwhile, BTC uses nearly 4 billion gallons per 100 million transactions, and ETH uses another 239 million gallons. Cryptocurrency's environmental implications have been the subject of much debate in recent weeks, not least in light of Elon Musk raising the issue of fossil fuel emissions incurred by Bitcoin mining. The businessman took such a strong stance on this issue that he suspended BTC as a currency option for purchases at Tesla. This decision prompted a swift decline in BTC price, falling below the $50,000 threshold. Even so, Musk's decision was not met without criticism. Tim Draper, for one, made the point that the present banking system caused its share of environmental issues. The global investor suggested that by Musk's philosophy, he should stop accepting purchases in fiat currency as well. Meanwhile, other nations are putting other measures in place to protect the environment against BTC mining. On May 15, reports stated that the Iranian authorities would enforce fines to anyone caught mining off household electricity. It's an eventful time for Ripple at the moment, as a pending lawsuit against the U.S. Securities and Exchange Commission, SEC, continues. The next major event in the case is due to take place on May 17, primarily surrounding John E. Deaton's motion to intervene. Deaton is scheduled to reply to Ripple and the SEC respective positions on his motion. The SEC will also respond to Ripple's position on that motion to intervene. But it's not all bad, as on May 16, data indicated that XRP was up over 12% in a 24-hour period. XRP are currently ranked the fifth most valuable cryptocurrency by market capitalization. The bulls purchased the dip to the support line of the symmetrical triangle today, indicating buying at lower levels. The buyers will now try to propel XRP above the resistance line of the triangle. If they succeed, the XRP-US pair could pick up momentum and rally to the 52-week high at $1.96. This level may act as stiff resistance, but if the bulls can overcome it, the pair may rally to $2.68. The flat 20-day EMA, $1.43, and the RSI above 53 do not signal a clear advantage to the bulls. If the price turns down from the resistance line of the triangle, the pair may extend its stay inside the triangle for a few more days. The trend will turn in favor of the bears if the price breaks below the triangle. That could result in a decline to $0.88. Thanks for watching. Be sure to subscribe and like.
At welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Money continues to pour into ETFs, particularly into equity ETFs, not so much into bonds, though. Let's talk with Charles Ellis. He's the author of the investment classic, Winning the Loser's Game. It's out tomorrow in an 8th edition. Dave Noddick, my old friend from ETF Trends, joins us as well. And Charlie, it's very exciting to have you on. I have known you for so many years. I've known your book for so many years. And yet we've never had you on CNBC before, to my knowledge. I found this in my library, Charlie. This was the 1998 edition of Winning the Loser's Game, which I got when I came down here in 1997 or 98 or 99. I got it, but this is the 1998 edition, and then the 8th edition is just out. Congratulations! It's a real investment classic. It has had a lot of influence on me personally. For viewers that are not familiar with your book, Charlie, summarize the findings of the new edition for us briefly. Your key points are that the evidence for investing in indexing, in particular, continues to get stronger and stronger. And can you summarize that evidence for us now?
Sure. You can look at it two ways. One is top down, the other is bottom up. Top down, you look and see over a reasonably long time period, 15 years, 20 years, how many active managers beat the market index that they chose for themselves and had free time to organize. The answer is somewhere between 10 and 15%, Bob. Only 10 and 15%. The ones that fall short by a great deal more than the ones who happen to win, get ahead by. So the odds are stacked against you very badly. The second thing you do is take a look at the data and work up from the specific facts. All kinds of changes have taken place in the investment management world. Now information is available to virtually every participant at exactly the same time in complete disclosure. So that's because of Bloomberg terminals. It's also because the SEC has made it a law for now a dozen years that if any investor gets any useful information for making an investment decision, that listed company is responsible for being sure they've done all they can to get that same information to everybody else. And when you make changes like that, it's no surprise that it's very hard for people to overcome cost of operations, the fees, and then, of course, for every individual investor, the taxes that are added on. Indexing doesn't have those kinds of taxes because it doesn't have that kind of turnover, and therefore, they get competitive advantage. ETFs and index.
Dave, any argument with that? I mean, the data, of course, is overwhelming, as Charlie says.
Yeah.
Morningstar does this. S&P does it twice a year, and they've been doing it for 20 years. I don't know if we can dispute any of this at all. It seems pretty clear to me at this point, but is there some finer point we need to put on this?
Yeah, I mean, just, having been a student of Mr. Ellis's book for, decades at this point, I go back to those sort of sources of active management, right? And